We're here to talk about what I call the Forex Market Pulse, which is the dollar, Dow, gold, and crude, and how they relate back to the Forex pairs. And I think it's a pretty important set of charts to look at on a regular basis. I look at them daily, if not more often, because one, I still trade futures relatively actively, but the correlation back to the majors and comdols is so important, I think, important to secondary confirmation, that to ignore them you might miss out on levels or setups or filters that you otherwise wouldn't know because of not looking at these charts. So it's really a matter of what are you missing if you don't understand where the dollar is heading. What are you missing if you don't understand the correlation between the Dow and the dollar yen? And I'm really happy to see a lot more of this is being discussed in the Forex realm because it is a futures chart. Okay, and I know a lot of Forex traders may not necessarily be coming from a futures background, but I've always felt that was an edge and a good one that I had, and that's what I'm hoping to share with you, that edge, through these Market Pulse presentations. So what do I want you to get out of our time here together every week? Well, number one is, what's the overall direction of these four core charts? Again, dollar, Dow, gold, crude. Which markets do they correspond with? We'll talk about that and do some overlays here. All right? And then finally, how do you go about using these systematically as far as where do they come within your decision making? Because that's a hugey, to have the correlation. Okay, that's all fine and well, but to me, any analysis that does not end with some sort of action that I could possibly take, some sort of potential trade, some sort of potential trade management, where it boils down to a trigger and price, if it's just an open-ended conversation about fundamentals without understanding whether they've been discounted by price or not, whether there's actually a trade set up at the end of that conversation, it's a bunch of wasted time. And I find all too often, sometimes a lot of analysis is just that. It's just talking for the sake of talking. To me, unless we're going to, and I want you to hold me to this, unless we're going to end a discussion of correlation with either some way to manage, filter, or confirm a trade, then what the heck are we doing here, right? That's what it's got to boil down to. I love open-ended conversations, but I'd rather do that at a cocktail party with a nice glass of wine, right? And these are trading hours here. We want to stay focused on the prize. So one of the big dangers, I think, in just open-ended discussion is I think a lot of times it just ends up being just a conversation. It's not practical, and I want to make sure that we stay practical during these sessions. So let's start off with the dollar. And one of the trades that I'm looking at right now, you can see it's a daily chart of the dollar, and it's resumed its strength back up. Now, dollar strength means what to me? What's the immediate correlation? That means it's going to be strength in the Swissy, and I do have a swing trade going on right now in the Swissy based upon that strength. In fact, I needed that strength to bring me out of the pullback. In a swing trade, I'm looking for the opportunity to buy a correction within the context of an overall trend, within the context of an overall trend. And in this situation, the overall trend is heading up. So when I'm looking at an uptrend here, I need that weakness for that correction. So in essence, the contrarian entry that I'm dealing with is really trend following. The entry might be contrarian. The entry might be taking advantage of a little bit of weakness, but it's weakness within a much bigger picture. And that bigger picture is the overall uptrend. So what did I need out of the dollar to pull this trade off? I needed the dollar to weaken. It did. I needed the dollar to re-strengthen. It did. And that's the backbone of that swing trade on the dollar Swissy. So let's take a look at the dollar and the dollar Swissy overlaid, and why it's such a huge part of why I would look at this futures contract known as the US dollar index and the dollar Swissy. So the US dollar is in black and white, and the dollar Swissy is in green and red, and you can see they have a very sympathetic correlation directionally. Now, obviously, if you take a look at what the quote is, if I'm looking at what the quote is right now on the on the Swissy, right now we're trading at, where's the Swissy right now? We're trading at 15.17. So 15.17 tells me that for every US dollar I have, I get 1.15 franc. So the US dollar is gaining in strength over the Swissy. That's the correlation there. And that's how I'm going to use a dollar and the Swissy together.